Reliance Nippon Asset Management had a steady third quarter. The financial services company saw its revenues rise nearly 25% in the last 3 months of 2017. Neeraj Shah caught up with the company's CEO Sundeep Sikka to discuss the quarterly numbers and trends in the mutual fund industry. Here is a slice of that conversation.
Reliance Nippon Asset Management came out with a steady state quarter, steady state by the standards that they set. And to talk about the quarter and the outlook ahead, Sundeep Sikka, ED and CEO of Reliance Nippon Asset Management, joins us on the show. Sundeep, good having you. Thanks so much for taking the time out. You must be happy overall with the kind of quarter that is coming. Is this the kind of growth that you would have bargained for? 24% revenue growth, bottom line growing roughly about the same percentage as well?
Yeah, thanks for having me. Yes, I think I'm very happy with the quarterly numbers that we have shown. I think, and more than the numbers, I think it gives me a lot of pleasure. Today the fact that we've declared our first maiden dividend. As you're aware, during the IPO, we had almost 16 lakh investors who had come. The maiden dividend within 3 months of the IPO. I think that is what makes me very happy. Today the board has approved that. I think overall the numbers have been positive. We have seen the overall growth, which is, I think the bottom line, if you see the PAT numbers have grown by 25%. I think it's 130 crores. And also if you see the 9-month numbers for the year, I think there's a growth of 26%. So overall, I think clearly, the trend is very positive. I think a lot of initiatives that the company has been taking over the years has been showing results. Our focus continues on retail and profitable growth. I think what is more pleasing is, when you look back, post demonetization, we have seen a lot of money coming into the mutual fund industry. But what is interesting is, if you see out of the 1,80,000 crores of retail money that has come into the industry after post demonetization, Reliance Mutual Fund has got the highest share, 27,000 crores. And we have also during this quarter opened 89 new locations, which effectively means with this our total presence increases to 260 locations, which is by far the highest in the industry. So we remain committed, with the ROE of 24% plus. I'm sure, while this quarter has been good, I think we remain very positive on the outlook both of the industry and the company.
Okay. The common refrain, Sundeep, is always that the inflows are continuing into mutual fund industry, which they are. These interactions give a chance to try and figure out where is it that the growth is actually coming from in a big way. Now, if I look at your profile per se, it's not just the T15 but the B15 as well, wherein you are deeply entrenched. Without having that bank distribution, you continue to dominate that share there. Is this quarter slightly different from what the past history has been, or is it continuation of the same?
No, I think the way I see it's continuation of the same on two aspects. While we continue to see money coming from the bigger cities and towns, but on an incremental basis, money coming from smaller cities and towns, I think is increasing. So while I think B15 for us is also, B15s are still the big locations. I think we today say B100 for us internally in the company, we term it as B100. I think it's the flows that are coming from B100 are increasing week after week. The new incremental SIPs that are coming from smaller cities and towns. So I think it's very exciting to see. Locations where there were no mutual funds present. Out of the 89 locations where we have just opened a new setup right now, all these locations did not have any mutual fund operating. It's very encouraging to see the kind of work the team is doing there to change the behavior of the investors, and trying to get them into the mutual fund industry. And I clearly see this is just a starting. A lot of till now, mutual fund industry was dominated by bigger cities and towns. But the trend is changing and we are trying to drive that change. And also, while this is about the mutual fund industry, if you look at this quarter in the last 6 months, or the last 9 months, we have also seen a lot of international flow coming into India. Along with Nippon Life, we have launched various funds across the world. We have launched 3 funds in Japan. We are seeing increased flows coming from Japan to us. We are seeing flows coming from Thailand. In our UCIT product, where funds are coming from Europe. So clearly, I think there's a very good times where both money coming from very small cities and towns of India who never participated in the India growth story, and also coming from locations and countries, geographies where it had never come before. So, and all these are clearly going to be adding to the operating leverage going forward.
I was actually going to ask you that a bit later on, since you've brought it up, Sundeep. If I look at the overall numbers, of course, the international numbers naturally so would be very, very small compared to what your overall numbers are. But how do you see growth there? It's a very low base, so the percentages could look inflated. But still, are there any internal benchmarks or internal growth assessment that you've done for the international ops?
No, I think the way we see ourselves is I think we want to continue to be a purely a domestic asset management company. Our main focus will remain India. I think clearly the opportunity that lies in India is humongous. I think we clearly see 2% of the population of India investing in mutual funds. This is going to just keep increasing. But coming to the international part, the way we see is I think we are leveraging the strength of Nippon Life. And I think again from our point of view, I mean, while we don't have any targets as such, clearly India has been seeing increased flows of money coming into the country. And clearly I think with the infrastructure and the network that Nippon Life has, I think we are trying to leverage on that. But again, one thing is very clear, that whatever we are doing in the international markets also, it's all about Indian equities or Indian bond funds. That's it.
Okay. What about trying to be able to differentiate? And I know it's a question that some of the smaller entities have to ask themselves, because the larger ones like you are well entrenched and have that brand. But I'm still trying to figure, whenever we do this mutual fund show, the recommendations, the views that people have is pretty homogeneous on the MF industry by and large. You being a large player and on that base having to grow, what are you doing in order to position Reliance Nippon Life Asset Management differently, thus that the flows continue or accelerate from where you are? Because I'm sure while you have very healthy market share, you're not satisfied internally. I'm sure you want to grow higher on the market share front as well.
No, you're right. So let me, take the second part of the question first. I think we continue to penetrate deeper. We want to increase the financial inclusion. However, when you talk about market share, for us, the focus will remain profitable growth. I think between market share and bottom line, I think our focus will be on bottom line. So I thought I'll clarify that point first, Now coming to the earlier part, what is the strategy going forward? I think I always believe, the success of the mutual fund, if you want to be a successful mutual fund company, the key thing is to keep it simple. I think we have to understand a lot of retail investors in India still do not understand mutual fund. I think what we have to do is keep the product simple, keep the communication simple, and from an execution point of view, whether it's we have to understand there are two parts of India. One is a conventional Bharat and there is a new generation India. So I think how do you participate in both, how do you penetrate in both? I think our strategy of being present, at 260 locations is with the largest branch network, I think is a strategy towards targeting the traditional India. At the same time, we are also investing a lot in technology. If you were to see, in the last 9 months, we have done more than 6 lakh transactions through our digital properties, which was less than 2.5 lakhs 1 year back. So I think clearly, it's the execution holds the key, and I would actually not try to, and from a long-term point of view, the core, anybody who's investing in mutual funds is to create long-term wealth. So again, the consistency of wealth creation also holds the key for that. So there's mutual fund industries, my advice will be, it is for anybody, you talked about people who come on your show also, I think it's whether it's a big player or a small player, the key is to keep it simple and execute well.
Okay, let me tell you about a couple of assumptions and just want your thoughts before we wrap this up. The expectation is that your share of equities would increase from a current 31 odd % that you may have to about 40 odd % over the course of the next 2.5 years. Okay, 34%. Fair call. Will it go up to 40 or beyond that within the next 2 or 3 years? And how does that help you in increasing your profitability, if at all?
No, I think very good question. I think the way I see this is, I think you have to understand we are an asset management company. I think today, while I think it's always very good to talk about equity, I think what we have to see is to create a complete portfolio, we want investors to come into the mutual fund industry. I think the first step typically should always be fixed income and then move into equities. I think our endeavor will be going forward, I think to keep, to get a lot of this money which has been lying traditionally in bank deposits to move into mutual fund industry and offer both debt and equity put together. If this 34%, how much up it can go further? Again, it's very difficult to put a number to it. But the way we see in absolute terms, if you were to see, today we are about 87,000 crores of equity assets. And, this has already increased about 3 times compared to what it was 2 years back. I think it has scope to go up multiple times from here. Can this 87,000 crores go to 2 lakh crores or 3 lakh crores? Answer is yes. Having said that, why percentage may not be the right way to look at it, because we also expect and we want the fixed income book to also keep increasing. So I think it's the way we will see it is our focus will continue on long-term assets, whether it's fixed income or equity, not on short-term money market funds. So why I'm trying to highlight this is this percentage of 34, can it go to 40 or can it go to 35? I think difficult to answer, but in absolute terms, equity will 87,000 can go to 2 lakh or 3 lakh crores, and it will go in that direction. It's just a matter of few years.
Okay, so let me clear this doubt then. You are saying that the absolute growth in equities will anyways drive the profit performance, even if the percentage share within Reliance Nippon Asset Management doesn't really change from a 34% currently. Because the common assumption is that with the 34 going to 35, maybe 40, that is what will drive the earnings expansion. You don't seem to be believing in that theory.
No, I think the point, no. I believe in that. The only difference, what I'm trying to say is, there are two ways to increase this percentage. I think 34 can go up to 40 or 45 also if you don't want to increase the debt. I'm saying both will increase. The point I'm trying to make is, there's one way to look at it, this going to 45 and the fixed income remains where it is. I think I'm trying to demystify this assumption that it's important for us that retail investors keep investing as an asset management company. We offer both fixed income as well as equity, and fixed income is also, long-term fixed income is also profitable. So I think I'm just trying to clarify, at no point of time, what you're saying is right. From long-term, increase in equity assets, not percentage of assets, will drive the profitability. And that's what our focus is.
Okay, fair call. I guess that answers most of my questions, Sundeep. Thank you so much for taking the time out and joining us. Congratulations on a good quarter, on the first dividend payout as well. And I'm sure investors are hoping for more of this going ahead. Keep up the good show.